All right, good afternoon then, folks, on Monday, the 13th of November, and we are at the beginning of another week of trading. Relatively quiet week last week across much of the major markets. But just to wrap up last week, we did see a bit of US dollar strength. Did see a bit of range-bound price action across equities. You can see your S&P, your Dow Jones, your Nasdaq, your Russell after the week before last. Did just chop sideways Monday, Tuesday, Wednesday into Thursday. A little bit of a sell-off on Thursday, and then popped back higher again on Friday. But largely a pretty range-bound week across the equity markets last week. You can see yields slightly higher last week, although they were lower to start the week, or higher to start the week, then lower, then higher, and just kind of met back in the middle. But comments from Jerome Powell seemingly pouring a bit of cold water on his comments from the week before, suggesting that the Americans were done with interest rate hikes. He did suggest that the dot plot, the most recent dot plot back in September, was now probably seen as incorrect, which would suggest no more hikes due to the fact that the dot plot in September did suggest one more hike to come by year end. So he's pushed back on that, and then he pushed back on the pushback of that last week, suggesting that the door was still open to ongoing rate increases or one more further rate increase to tame inflation. So it's pretty typical. Jerome Powell says one thing, then just backtracks on it and says another. It's pretty neutral. Pretty neutral bloke, so that's not really too surprising, to be honest. Not really the clear-cut direction that you would want to see, though. We had the Aussie last week, the central bank hiking, but then suggesting that they were finished with their hikes. But really across last week, bit of US dollar strength, also a bit of stock index weakness off the back of Michigan consumer sentiment, which came in negative and kind of reduces the need for a further rate hike, which did push stocks higher into the close, but after a largely range bound week last week. But on to this week then. Not a great deal on the economic calendar other than CPI tomorrow. You also got CPI and core CPI obviously being the metric removing food and fuel costs from the rate of inflation. Well, that comes out next week, comes out tomorrow in tomorrow's trading session, and that is likely to set the tone for the week, right? You've got on one hand, you've got a central bank that are seemingly reluctant to continue hiking interest rates. I don't think they really want to. I think they wouldn't if they would probably rather not, to be fair. I mean, I've always likened it over the last couple of years. I mean, since COVID, I mean, they obviously when they cut interest rates for COVID, they brought it back down to zero, printed unlimited amounts of money. Again, I'm not going to go too into that in too much detail, but they then go and then start hiking interest rates, but they hiked interest rates a little bit too late. You think? Yeah, I mean, I think they did start to hike interest rates a little bit too late, and sort of liken it to like a bit of an amateur boat captain. You know what I mean? You start to turn a little bit too late, and then once you do turn, you kind of overturn a bit, and that's what's kind of why I think they're probably somewhat reluctant to keep hiking interest rates. They probably started to hike interest rates a little bit too late, and now they're kind of running the risk of kind of over hiking, you would imagine. So they will want inflation to come down, but inflation continues to remain sticky globally. It's not coming down at the rate that people would want. You're likely to see the headline print slow down, but the core CPI print, which obviously removes food and fuel costs, likely to keep trucking on at 0.3. Now, in June and July, if you have a look here, June and July, 0.15, 0.16%. Over June and July, after it had ran definitely too hot over the first part of the year. Coming to June, July, then 0% inflation, but it's now started to reaccelerate. Right, it gone from 0.158, 0.16, okay, about basically 0.16, but then up to 0.278, up to 0.323. Does that get higher? Does that print 0.4 and start to accelerate again? That's not something the central bank will want. Definitely not something the central bank will want, and will give them something to think about if that does beat consensus. If that misses consensus, right? If that misses consensus, it reaffirms their stance that they do not lead, or reaffirms market stance that they will not hike interest rates again. But judging by the comments last week, are we set up for a higher than anticipated print tomorrow? The fact that he come out and at the backtrack on his comments, or we're done rate increases. Now, is this a bit of a front runner to this? Did they come out and make those comments, as I said, as a bit of a front runner, expecting or knowing that we will get higher than anticipated numbers tomorrow? Let's wait and see. Let's wait and see in tomorrow's trading session. But consensus 0.3 for the month over month figure, 0.1 for the headline figure. Core CPI year over year 4.1, and the total 3.3. So the core readings likely to remain sticky. The headline prints to come down. Inflation from the UK on Wednesday morning, 7 o'clock, 4.8%. Again, that's too high. We all know it's too high, but at the end of the day, that's more progress towards their fight against inflation. So whether it beats consensus a little bit or misses consensus a little bit, I wouldn't imagine it has too much of a bearing on the price of sterling. But as I said, but we'll have to see. On Wednesday at Wednesday 7 o'clock. We'll cover that in more detail as we get around to it a little bit later on in the week. No high impact data on Thursday. Come around to Friday. Not really a great deal out of Friday, other than consumer spending figures out of the UK. So a relatively quiet week on the economic calendar. CPI tomorrow is centre stage. I nearly missed the unemployment rate from the UK, 7 o'clock tomorrow, but CPI tomorrow from America is likely to drive price action over the course of this week. A higher than anticipated print will increase the likelihood of a potential rate hike, or another potential rate hike below consensus reaffirms the stance that they may not need to hike again. That obviously has implications across markets, and we will break that down in tomorrow's video. But relatively quiet week in the data front. CPI main focus of attention. Apart from that, not a great deal to kick markets into gear. Not a great deal out in terms of the geopolitical side of things as well. President Xi does travel to the US today for a meeting with Joe Biden, or today, I'm not sure actually when he travels, but it's this week. He will be in America this week for a meeting with Joe Biden, so we will keep an eye out for any comments on that side of things. Maybe they come to some sort of an agreement that they will be friends going forward. It's likely to provide a bit of support to the equity markets. But yeah, that's kind of where we're at for over the course of this week. Relatively quiet week last week, relatively mundane start to the week this week. Hopefully CPI can kick markets into gear tomorrow.